Financial markets are systems where individuals and companies trade various types of assets. But what exactly does that mean, and why are they so important? Financial markets are systems where individuals and companies trade assets like currencies, commodities, stocks, indices, and cryptocurrencies. These markets serve as a critical connection point between businesses seeking capital and investors looking to grow their wealth. Financial markets trade many types of assets. These include stocks, which represent ownership in companies, bonds, which are debt securities, foreign exchange markets for currencies, commodities like gold and oil, and newer assets like cryptocurrencies. Many of these trades happen in places like the stock exchange shown here. Two key concepts in financial markets are liquidity and volatility. Liquidity refers to how easily an asset can be converted to cash without affecting its price. Volatility measures how much an asset's price fluctuates over time. These concepts are essential to understanding the modern financial ecosystem. In financial markets, prices are determined by the forces of supply and demand. When demand is high and supply is low, prices tend to rise. Conversely, when demand falls and supply increases, prices typically fall. This fundamental economic principle drives price movements across all financial markets. Investors in financial markets are often categorized based on their outlook. Bulls are optimistic investors who believe prices will rise. Bears are pessimistic investors who anticipate price declines. These opposing views create the trading dynamics that drive markets. Market makers play a crucial role in financial markets by matching buyers and sellers. They provide liquidity by continuously offering to buy and sell assets. Market makers profit from the bid-ask spread, which is the difference between the price at which they're willing to buy, the bid, and the price at which they're willing to sell, the ask. Financial markets can be categorized in several ways. Primary markets are where new securities are sold for the first time, such as during initial public offerings or IPOs. Secondary markets are where existing investments are traded between investors. The term capital markets encompasses various markets for raising money, including both stock and bond markets. Stock markets specifically refer to markets where company shares are traded. Financial markets are rapidly evolving, driven by technological advancements and changing global dynamics. Artificial intelligence is now a cornerstone of the financial sector, redesigning operations and transforming business models. Banks are increasingly adopting an AI-first approach, using AI platforms for core business strategies. These technologies are also transforming risk management and compliance processes across the industry. We're seeing a resurgence in capital markets activity, fueled by lower interest rates and moderate inflation. Private credit continues to grow dramatically, expanding from $875 billion in 2020 to more than $1.6 trillion today. Digital transformation, driven by fintech and shifting customer expectations, is reshaping the financial landscape. Cloud computing, data analytics, artificial intelligence, and machine learning are all becoming central to financial operations. Sustainable finance and environmental, social, and governance factors are becoming increasingly important in investment decisions. There's a significant rise in demand for sustainable investment options, with financial decision-making increasingly incorporating ESG factors. Keep an eye on emerging financial hubs, particularly in Asia, as they increasingly drive global capital flows and investments. While New York and London remain the dominant financial centers, cities like Shanghai, Singapore, and Hong Kong are rising in importance. Looking to the future, several key forces will continue to shape financial markets. AI will continue to drive data-driven decision-making, from investment strategies to customer service. Digital currencies and blockchain technology have the potential to simplify cross-border payments and transform financial infrastructure. Financial institutions must adapt to evolving regulations related to AI, data privacy, and cross-border payments to stay competitive. And sustainable finance will continue its explosive growth, with ESG factors becoming central to investment decision-making. As financial markets continue to evolve rapidly, organizations that embrace these technological and sustainable trends will be best positioned to thrive in the future landscape.